In this video, we're going to look at which trading strategies work best with cryptocurrencies. Stay tuned. Hey traders, a very warm welcome to you. Okay, so quick video on which trading strategies work best with cryptocurrencies. Now, in my opinion, you have to treat cryptocurrencies just as you would any other market. You need to look at what's driving it. You need to look at the technicals. You need to kind of look at the patterns. You need to look at the risk most of all. But what are the best kind of ways of approaching trading cryptocurrencies, whichever one you choose to trade? Okay, so we can kind of put things into two categories here. And I'm going to have to put a kind of bit of a caveat on some of these in a second, but bear with me. First category is technical. With technical trading, you've really only got two ways of trading it. You either trade with the trend, i.e. momentum, so you're trying to do an extension of the move, you're trying to look for a continuation of the move, continuation plays, momentum plays, trend plays, all that kind of stuff, or you're trading mean reversion. And mean reversion is basically when something has gone, you think, too far, the spring is stretched, and you're looking for that stretch point that's going to come back to a kind of equilibrium point. Now, it may continue back on, but you're just trading that stretch, if you like, that extension, thinking it's too far and it's going to contract. So a couple of ways that we get on momentum if we're trading crypto, whichever cryptocurrency we're choosing, would be traditional breakouts. So we come up to a key level. If we're talking on the long side, we come up to a key level. It struggled at that level, let's say for a week, comes up to it and breaks through it. We would buy as it breaks through it, thinking the market is going to continue moving, and we'd have a stop loss. In other words, we'd take our loss if it didn't work out under that breakout level. Pretty simple. We obviously want to go into some more depth in terms of when we time it. So we want to look for the right market conditions, what the previous price has done. And I've done another video on that before on the channel, so go and check that out. Trading breakouts, and obviously, whether we're trading Forex, we're trading crypto, whatever we're trading, generally the rules are the same, just need a little bit of tweaking and adjusting. And what we've got is trend pullback. So we're literally waiting for a trend to occur, like a big trend in crypto one way or the other, and then we're waiting for a little bit of a retracement to buy for a continuation of that trend. Or if we're shorting, a little bit of a retracement to sell and a continuation of that trend. Now, of course, the key comes in with timing that pullback. Do we use like a moving average on our chart? Do we kind of wait for a double bottom within that trend? How do we time it? Do we use a percentage of the move? All these kind of different ways we can do it. But these are good strategies of getting on board momentum type plays. If you believe something's going to continue, rather than just clicking, buying and hoping, you're trying to time it a little bit better and give you the most opportunity for the biggest profit. The other kind of way we're looking at is mean reversion. Now, bearing in mind cryptocurrencies, when we look at charts from history gone by, they've had these kind of spells. Most of the time, it's been a momentum play. Ripped off the upside, come down to the downside heavily, and anything where you're playing it, you wanted to play on the momentum side while still kind of trailing your stop and managing your risk. If we have conditions of mean reversion, in other words, we have a range-bound environment, be very cautious using mean reversion when we have momentum, when we have trends, because all you're doing is kind of stepping in front of a freight train. If everyone is buying and you're trying to sell, you're going to get run over. So you have to wait for the right market conditions. However, if we're swinging up, swinging down, and we're kind of in a period of indecision, whichever long that period may be, could be a week, could be a month, could be a year. If back and forth, testing highs, testing lows with reasonable ranges, mean reversion is the guy you want to be trading. So you want to look for support and resistance. Done videos on this before, the basic support and resistance. So we're looking for levels where it hasn't breached before, struggled to get above. So we'll be shorting there, struggling for a remove back down. Any push to support that can't get through, holding a price level that's holding, we'll be buying there, looking for a push back up to maybe the middle of the range rather than top of the range. Loads of different permutations on that strategy. And then we're looking at things like double tops, double bottoms. So, same kind of thing, just a little bit more refined from a kind of chart perspective. Pushing up, pushes up again, struggles, pushes back down. We're looking to short that point where we believe sellers are hitting it from the top. So a couple of there's only a couple really of ways we can generally trade technically, is with the trend or mean reversion, and a couple of ideas and suggestions within that subcategory of how we could potentially get on board some of these moves. Okay, the other thing is I've got here is fundamental. Now, fundamentals really, some people say fundamentals are the valuation of it. Now, we know it's very difficult to value a cryptocurrency. There's no kind of, can't look through the earnings and the assets and go, yeah, well, that's a valuation of it. So I'm really going to put a line through that. You know, it's all very speculative. You've got one guy saying it's worth, you know, rocket price up into the stratosphere. Another guy saying it's worth zero. So let's leave that out for now. However, I think fundamentals also cover things like crowd behavior and news flow. What do I mean by that? So crowd behavior, if everybody is kind of piling in, it's pushing high, maybe you want to ride the momentum with caution that these people may well be getting trapped in it. Or are we in a situation where everyone's in it and are now coming to the downside? Again, knowing generally how people are behaving and how people are feeling. You know, is it getting good media coverage? Is it getting bad media coverage? What's the crowd's perception of it generally? Is the chart telling us what the crowd is doing? We can't kind of pinpoint it exactly, but we can get clues and we can trade potentially off that. An example would be, you know, if we thought that it was getting very, very frothy and a lot of people were getting in who were just gamblers and were buying on credit and margin, that might be a time for us to cut our longs. We'll be using that as a signal as opposed to a technical signal. And vice versa, we might have a scenario where, you know, these cryptocurrencies are absolutely hammered to the floor. Everyone thinks they're dead. You know, everyone's out of it. Maybe that's an opportunity. You think, okay, I want to fade this crowd behavior. I'm going to pick up a little bit on the long side for a bounce back up because really there's no more sellers anymore. And I'm going to have a little play. I've quantified my risk. It might be a 10-to-1 risk reward play, in which case why not have a shot? The other thing I've got here for you is news flow. So very, very news driven, these cryptos. And yes, you can combine this with technical, and this is probably where the sweet spot is, if I'm honest, but news flow. Not talking about people's opinions and all that stuff. We're going to have loads of that coming through all the time. This is serious news, like, you know, a government saying something or a founder saying something, someone really significant moving the market. And then the sweet spot is to combine that news flow with one of these kind of trades. So if someone comes out and says something very, very bullish about the cryptocurrency you're trading, maybe then you'll go to your momentum strategies, your library of strategies you've got, your breakouts, your trend pullbacks, whatever it may be, and say, okay, I have a little bit of fundamental power behind this trade. I'm now going to use a technical kind of mindset and approach. I can quantify my risks to get involved in it and get on board with it rather than just buying just because the news says so. So, you know, watching that, and that's kind of will give you, you know, a catalyst for getting involved if you're purely looking to speculate and make money from a speculation perspective rather than investing in the story of the cryptocurrency. This is really what this is about. You know, use the news flow as a catalyst potentially that gives you a little bit of power, a little bit of, you know, force behind the move, and then time it with a technical trade. However you kind of want to do that, whether you're using momentum where you're waiting for the kind of crowd to finish the news to do its job and then for it to unwind a bit. So perhaps you're taking a short from that extension back to a mean, just something like that. So there's a kind of just a little taster really of what we could do if we were trading cryptos. But my opinion is that, you know, using that news flow as the catalyst combined with technical skills to quantify the risk. At the end of the day, that's really the key thing. You may have an opinion whether it's going up or going down, but if you can't find a sweet spot to enter where the risk is quantified and sensible rather than just at an arbitrary level, then you haven't really got a trade. You want to find the level where you can take it, risking 5-to-1, you know, risking 1 to make 5, 1 to make 3, 1 to make 10, that kind of thing. If you can find that position, then you're in a good place to trade cryptos. All right, guys, see you in the next one. Take care, keep the risk managed. Goodbye.